Okay. So before we move on to the question and answers, I would just like to introduce you to our third panelist today, other than Sailesh and Samir. Hiten is a chartered accountant, chartered certified accountant, and a chartered tax advisor. He is a partner at Arithma LLP, where he advises owner-managed businesses and private clients on their tax compliance and planning needs, including capital gains, inheritance tax, and non-domicile planning matters. So let's move on to the first question, if I can. And what's going to happen is both I'll be asking a question, then Shandip will follow in with the second question and so on, so it's easier. So first question to Sailesh, please. Are foster children treated in the same way as your own natural children for IHT purposes?
I think this was covered by Samir in his presentation, and he said that, look, foster children are treated as your own children. So for the purposes of, say, gifting the family home, that the foster child will be treated as your own child.
That's right. And
Right.
can I add to that?
Please.
In terms of if someone has not made a will, and when we look at the rules of intestacy, when we regard children, legally adopted children do count, but there's nothing to do with foster children unless there's a legal document. Foster children are a little bit different. So I'm not pretty sure on that basis. And that's hence the reason for making a will to specify exactly where it's going to go.
Sure. That's a good point. Sandip?
Excellent. Great answer, Samir. Thank you for that. The next question I want to pass on to Hiten, and it's quite pertinent with the audience we have. Is jewelry included in the estate value?
Yes, you bring in all your assets, whether they are jewelry, investments, loans, and loans made to individuals or loans you make to your company, your director's loans. So yes.
Brilliant. Okay.
And don't forget, when you complete the IHT return, you need to check what you said on your insurance policy, your home insurance policy, compared to what you're putting on the tax return. Because the revenue can ask, that, why are you insured for £100,000, but on your IHT return, you're showing £20,000?
Indeed.
Right.
Gift it early. Yeah.
Good
Yes.
point. Okay. Question for Samir. Samir, if in the future potential IHT changes may happen, law changes, etc., could these changes apply retrospectively?
$1 million question.
I know.
I don't think so. In the sense, sorry, it's hard to say. Usually when there are changes announced, I don't think the governments have been quite harsh to disregard what has been happening previously. But I wouldn't really worry about it because we don't know, and it's a bit of speculation. But I couldn't answer that quite accurately.
That's fine.
Can I come in?
Rohit, can I just add?
Sailesh, and
If I can just add.
Yeah.
I think the only way where they could catch you is if you get involved in some aggressive plan, because that's what happened with remuneration, employee benefit trusts, which the revenue thought were aggressive, but obviously they didn't work when they were implemented.
Yeah.
So I think whatever we've discussed today, if you implement that, I don't think there is any major risk.
Okay, very good. Sailesh?
Yeah, I mean, I was just going to add, in addition to Hiten, is that the government has done this before. They, as Hiten mentioned, on employee benefit trust, there was something called, a lot of the practitioners said that was retrospective legislation. And it has also happened in terms of inheritance tax planning, where, previously people used to pass family homes and carve out leases. So the government acted. In one sense, a lot of practitioners said this was retrospective legislation. So there is mileage there to, government has mileage there.
Yeah.
Excellent. Okay, so actually over to you, Sailesh, to continue this one. So question says, my husband died in 2012. I'm a single parent. Do I qualify for the residential nil rate band?
Yes, thank you, Sandip. Yes, the lady will qualify for the residential nil rate band, and there will be two lots of that. If the property on the husband's death went to her, and then she were to pass it to her children or to her grandchildren or subsequent generations, then she will be entitled to two lots of 175,000 pounds.
Great.
The only other thing to note for here, which Samir mentioned earlier, is that, you know, if the total estate of the lady is more than 2 million, then that band starts reducing. So that's something to watch out for.
Excellent.
Yeah. Okay. If I address this one to, I guess, Samir, because I think you covered this in your talk. There's obviously there's scope to increase the 6-month deadline, I guess, for payments. And how would people raise that sort of cash in such a short time if they need to?
Sure. Yeah, there is scope, definitely. You can arrange with HMRC to pay in installments, depending on the estate and the IHT bill. You know, it can go up to 10 years, to be honest, 10% every year. In terms of how to raise that amount, well, you have time to arrange for your finance if that sort of finance plan is given. You know, obviously there is scope to sell some assets if possible. So depending on what the estate constitutes of and how much time is agreed, the HMRC is pretty generous, because they do realize and they do understand that it's not an easy way to just pay cash within 6 months to settle that. So you will be given time to pay.
Mm-hmm. Good.
Can I just add here? I mean, aside from that, I think this is where planning is very important. So if you talk to your financial advisor or to your accountant, you know, they will foresee this, that say you have a lot of illiquid assets in your estate, then perhaps they will find avenues such as taking out life insurance, which is written in trust, then you can pay this liability very easily. Or there could be other avenues, if thought is given in advance.
Mm-hmm.
So early planning is always key. That seems to be your mantra, Sailesh. So over to Hiten. Does an estate which includes life insurance, if it's in trust, is that excluded?
Yes. That's the whole idea of putting it into trust.
Okay. Good, concise answer.
Yeah, exactly. Perfect. Samir, I'll again pass you this question because it's something that you covered in your session, and it's a threefold question. One is, how many years, and I think you mentioned that you can only carry forward the gift allowance of £3,000 for 1 year.
That's correct.
And can the gift allowance is it only for one person that you're making the gift to, or can you make 10 gifts of 3,000 or £300 or something like that? But is that that's the other question on this leg?
Yeah. So the first question, I guess, yes, you can carry forward 1 year. So between husband and wife, they have £6,000. So if they missed 1 year, the following year, it will be £12,000. But if you miss that second year, then unfortunately you can't carry. You can carry forward only 1 year forward. In terms of the £3,000 gift exemption limit is per person who is making the gift. So in your example where you have 10 children to give, £300, that works, absolutely works.
Mm-hmm. Okay. And you answered my third leg of the question, so that's fine. Thank you.
Excellent. All right, so over to Sailesh.
Sorry, Sailesh, you were saying something.
Yeah, sorry, just one other point. I mean, the person who asked this question about the £300. Again, the other thing to consider when you're making these sort of gifts, are they gifts out of your surplus income? In which case it doesn't fall into this 3,000 limit as well. So,
yes,
there could be planning around there for individuals who are earning a significant level of income.
Yeah, that's a good point.
Very good point. So again, continuing, Sailesh, with you, comment basically, and maybe looking for an answer. So if I want to pass my property to my daughters over 7 years, And that's where the question stops. So maybe they're looking for a continuation of that comma, or for you to comment on that.
I mean, that can be read in two ways, that is the property of such a significant value that they don't want to pass it over in one go, and they want to dice it up and pass bits of it over 7 years. That is how it could be read. And yes, you can do that. So, where, you can pass, say, in 1 year, just 25% of the property, and then next year, 10%, etc. So you can do that. If it's a pure question about gifting and surviving 7 years, then Samir covered that. You can do a lifetime gift of a property to your daughters. The only thing to bear in mind here is, firstly, you have to survive 7 years, in which case inheritance tax is not payable on that gift. But the other point, and a very important point, is that you will have to pay capital gains tax on this property. Because you are gifting it directly to an individual as opposed to a trust, which gives you an option of deferring the gain. So that's what I can make of that question. If any of the other participants want to add, then feel free.
No, I think Sailesh, you tackled it. I mean, that property is it your own home, or is it a second property? Again, the capital gains tax could differ, but I guess if you can be more specific with your question, then it will be easier to answer that. Otherwise, I think there's a lot we can go on about in terms of gifting, but I think Sailesh, you've covered well.
Yeah, so you need probably professional advice, and take that out offline on that particular question. Yeah.
Yes.
The next question to Hiten. Hiten, who pays the inheritance tax on large gifts if you die before 7 years? Is it the estate or the person who has received the gift?
The recipient.
Right.
On life deaths, it's the executors who would pay the tax generally, and then distribute the balance out.
Okay.
Okay.
Right.
Question to Samir. On death, is capital gains tax payable on an investment property and then inheritance tax?
No. So when I referred to the interaction, this is the problem. This is what the Office of Tax Simplification is working on. That it is not fair. When you're paying tax when you are gifting, and then you go to pay IHT, but upon death there is no CGT. So when you die and that property is pregnant with gains, the good thing is for IHT purpose, it will be the value at the date of death which will be transferable. So there is no capital gains tax payable, but inheritance tax only on that value.
Excellent. Good. Thank you.
Sailesh, question for you.
Yes.
If the parents pass on their assets to children, then would the assets be part of the child's assets for IHT? And if so, then the £1 million band could easily be used, presumably, by the child as well. Any comments on this, please?
So firstly, what the participant said is correct. So whenever a parent gives an asset to a child, that asset then becomes the child's asset, and so it will form part of his or her estate on their death. So this obviously, as the participant has noted, creates a problem for the people receiving the gift. So this is where, again, I would add that trust can form a useful part in terms of planning for inheritance tax. Because if an asset is gifted into a trust, but for the benefit of those children, then that asset won't form part of their estate if the trust is of, say, a discretionary trust type. So again, some planning can be done there.
Good.
Excellent. So over to Hiten. This is to do with buy-to-let properties, and there's two separate questions, but I'm trying to contain them. So first, can you gift a property which has a bank loan on it? And second, can you gift a buy-to-let with a mortgage or a bank loan and rental income to a minor?
Yes, you can gift, but okay, let's say it's a parent gifting to a minor child. So there are stamp duty land tax implications because you got debt, which is consideration for stamp duty land tax. And secondly, there will be capital gains tax payable depending on valuations. And thirdly, the fact that you have gifted it to a minor child, the income arising on that buy-to-let will be taxable on the parent. So it's not really particularly a good idea because you're triggering a lot of tax charges immediately and going forward, depending on the age of the child.
Okay, so the answer is yes, you can gift to a minor, yes?
Plus also you need to watch out, will the lender be comfortable?
Yes.
Yeah, exactly.
Because it's a minor child.
Yeah.
Exactly.
The answer is yes, but not sure if it's always a good idea.
There's a lot of issues to consider.
Okay. Samir, a question for you. Does a non-domiciled person having assets in the UK get the nil rate band?
Absolutely. That person is in the same situation as a UK dom for that purpose, yeah.
Okay, good.
Question to Sailesh. Is the stamp duty land tax payable when a property is transferred into a trust?
So again, a good question, but yes, stamp duty land tax is not payable because it's a gift. So there's no consideration given there. So that's the point to note there.
Mm-hmm. Yeah. Okay. I think question for Hithan. Do trusts get allowances for income and CGT payable by trust?
Yes, there's a very small income tax. Gains tax, it's half the normal annual pension. So yes,
Right.
taxes are payable.
So you get 50% of the personal allowance rate for an individual.
No. The CGT allowance.
The CGT allowance only, but nothing for income.
So
there's a very small amount.
Yeah. So for income, there is a dividend allowance of £2,000, and there is a personal saving allowance, but not the personal tax allowance which individuals get. That the trust doesn't get.
Okay, good. Thank you.
Okay. Again, I seem to be picking on Sailesh, but I think because you talked about trusts, questions come in. Is there a limit on the number of trusts one can have?
Well, there's no limit to how many trusts one person can have. That's their choice. But this is where it is important that you consult your advisor, be it your tax advisor or your accountant, to ensure that it is done in as efficient a manner as possible. So I talked about setting up a trust. If you start early enough, you can go through a cycle of 7 years so that you pay minimal amounts of inheritance tax, both at the entry point and in the long run. So this is something people should think about. Take good professional advice and then decide how many trusts you want to set up. And again, why do you want to set up so many trusts? Is it just purely for inheritance tax planning? Because again, managing a lot of trusts is a headache, and that has to be done, and it's costly. Mm-hmm. So the practitioner who they take advice from will have to consider all these factors in giving their advice.
And also the nil rate band is an added of all the trusts as well. So it doesn't make any sense, does it?
Yeah, so, but every 7 years you can take, you get a new nil rate.
Yeah,
correct.
That's true. Okay, I'm also conscious of time. We've got a few minutes left, but we'll carry on a little bit longer because we started a little bit late and we've got a few other questions to ask. So we'll just carry on for a few more minutes. Can a SIP be put into a trust? That question, if I could put to Samir, please.
Yeah. The SIP is already in a trust, so I don't see any advantage in settling into a separate trust.
Mm-hmm.
Okay.
Only point I would add there is, as Samir said, all pensions are actually written into trust from the outset. So that is right. If you're thinking of when, say, somebody passes away and where those assets go, then there could be a planning point of putting those assets into a further trust, be it a discretionary trust or whatever. But again, you need to take professional advice from your financial advisor.
Okay.
All right.
All right. Samir, are there any advantages to add a child as a joint owner of the house, or is it better to pass on as part of the estate on death?
So it depends. So adding, I believe it's a question. It's to do with your main home. So if you're adding a child onto the deed, then I talked about gift with reservation of benefits. So if you're staying in that property and passing it to the child, it doesn't really work for inheritance tax purpose. In terms of, it really depends. And I'm trying to think of a situation where would it be advantageous. So if it is falling within your nil rate ban and for the purpose of, keeping the probate process simple, perhaps a good idea, but it really depends what your estate value is. And what your income situation is. So again, I think it's quite a direct question, but it would be better to be answered in the context of the whole financial planning, estate planning scenario.
Mm-hmm.
Does it make sense if the child is living there?
Does it make sense? It doesn't make sense from an IHT point of view. So no, it makes sense that only half the property will be regarded as being gifted, but the full IHT benefit will not be there.
Of course.
Mm-hmm.
And you talked about in the presentation other consequences. Sorry, Hitan.
Yeah, unless what you do is both parties bear half the running costs of the property and the child remains in occupation, then there is an inheritance tax saving. If the child leaves the property, moves it to his or her own property, then there is a bit of a complication.
Yes.
And obviously going forward, the child on disposal of the property will be subject to capital gains tax for part of the period.
Excellent. Good answers.
Correct. Hitan has made a good point there. And the other point to bear in mind here is that, you need to, apart from the tax, the individual needs to think about their own security. If they're giving half the property away and then there are some issues there, could they have problems living in that home? So, there are various factors to consider, not just tax.
So tax is not the tail, always. Yeah.
No.
Or Ruben?
Yeah, sorry. Question for Sailesh. Sailesh, if a grandparent leaves funds in your name after his death, are you still liable to pay IHT on inheriting these funds? And I think that's estate pays the IHT, if I'm right from what you said a few minutes ago. And would the inheritance fund have an impact on other benefits that they may be claiming? So if a person is on unemployment benefit or any other universal credit or whatever it is, I presume there would be an impact depending on the amount. So
yeah, I'm not an expert on social benefits and claiming them, but my gut feel is the same as yours, that that it is likely to affect benefits which are means tested benefits if they are claiming those. So again, you have to be careful, and if they have the opportunity, if that process hasn't happened, there should be an opportunity to perhaps think about whether those assets are put into trust by the grandparent before they pass away. So again, planning, comes to the fore in situations like this.
Exactly.
And can I add to that? There is a bit of post-death planning which can happen too. So if that is happening, we have a 2-year period from the date of death to vary the will, and we call it through a deed of variation. So something which we cannot ignore.
Okay.
Sure.
Samir, carrying on.
Point?
And this is probably speaking for many, many couples out there. It's a really strong question. What can a childless couple do to lessen their IHT?
Enjoy. Spend. So obviously they need to think about that after spending, and if the wealth is increasing, then surely they have some wishes. There are people in the family, sideways or downwards, or nieces or nephews. They need to think about charities. In terms of wills, there's always a starting point, and this is the time when they will start thinking that what will happen to surplus assets which we haven't spent, and this is where those wishes can be made. But I think the fact that they don't have children doesn't mean, I guess the responsibility is less, the stress is less, there is that less of thinking that I need to do something for the children. And I guess they are at an advantageous situation that they have a much bigger choice. So they need to be selective what means to them more in terms of where their assets are left. IHT perhaps is not a big deal, maybe because it's not passing down the family, but it could be factored in and balanced it out and make sure that it's not left to the government to deal with it, but at least do something about it. In the end, share it out with the family.
If they've not done anything, would you recommend potentially giving the tax-free sum to whoever and the rest to charity so they don't end up paying any inheritance tax?
Absolutely, absolutely. They've got the nil right bands, they've got the residential nil right bands, and this is where will planning is really important. Those sort of actions could be drafted in a will, absolutely.
So they wouldn't get residential nil right band, would they, anyway?
Because they're not children, absolutely.
Yeah.
So, okay.
Unless they plan to adopt a child, then yeah.
Yeah,
that's true. Okay, question for Sailesh. What evidence or records do we need to keep for gifts which are made in the 7-year rule period? And presumably for charitable donations, it's only the charitable exemption only kicks in at the end. So if you've made charitable donations over the life, that will be slightly different from what you do at the end when you leave money for charity.
Yes. So firstly, in terms of evidence that you need to keep, I mean, it depends on what you're gifting. So if you're making large gift of cash, then it would be worth documenting that, and also keeping evidence that, look, here I've given this check or done this transfer to so and so, and here's my letter to the donee. Saying that, look, I'm gifting this money. So things like that. For property, again, there will be a legal document made, I presume, for a gift of a property. And if there's capital gains tax that would have to be paid, then that would have been declared. So that's additional evidence there. In terms of the charitable giving, yes, the questionnaire is right that gifts made during the lifetime don't fall part of that 10% rule. That only applies to your death estate. And if your will says that, look, 10% of my estate goes to a charity or charities, only then my understanding is they'll qualify for that reduction in the rate from 40 to 36%.
That's correct.
Yeah, but record keeping is very important,
Yes. Okay, Shandip.
Someone has asked, basically, they would like to give 4 lots of £3,000 in a year. Is that valid? Hiten?
Yes, you can. And if you have not used the previous year's allowance, and obviously that comes into play. If you have, then the remaining 6,000 will be treated as a potentially exempt transfer, subject to inheritance tax if you die within 7 years.
Mm-hmm. Okay. Excellent.
Okay. I'm literally now going to take the last question because I think otherwise we're going to go too far on. There was one, I've just jumped on it. Sorry. Just bear with me for 1 minute. I've just got to get to the
Can I ask one quick question?
You can in the meantime if you got one. Yeah.
So Hiten, again, over to you on this one. Again, a trust question. Can you add further assets to a trust? Maybe it's between Hiten and Sailesh. Can you add further assets onto a trust already set up?
You can, yes. And depending on what you add, there may be a tax charge or there may not be a tax charge. So for example, if you put shares in a trading company, then there won't be a tax charge, immediate tax charge.
Okay. Sailesh, this one is for you. Do trusts need to file tax returns every year?
The simple answer is yes, because if assets have been gifted to a trust, then hopefully those assets will generate income, and therefore income tax returns need to be filed every year. In terms of inheritance tax returns, no, they don't have to be filed every year. They'll be filed every 10 years. And also when you put the asset into the trust, you have to notify HMRC. And if there's any tax to pay, then you have to pay that. So that's the simple answer. And also, sorry, if you have made any capital gains on the disposal of assets, you declare that through your income tax return for the trust.
Okay, great.
Rumit,
One last
one question, one thing, and I think this will leave everyone happy on this. There's a very last question I can see is to the three panelists. Does any one of you know any loopholes?
on the golf course.
So we can close it there, Rumit. So
Now I had one point for all three panelists to answer. You know, IHT has been in the press for a while, and obviously you see every government trying to do certain things with IHT, and it's a political time bomb rather than, because the amount you're collecting is a much smaller amount. The fact is, you know, is this ever going to be abolished in terms of, you know, just getting rid of IHT? When you think about the amount of people you need to administer it, and the collection is not huge, and the amount of tax legislation there is around it, it can actually may simplify everything. So let's start with you.
I think the answer would be a political one, because a government, certainly the Labour government, wouldn't abolish something like this. But if a conservative government were to abolish this, it would send the wrong message out to the country at large. So I don't think it will ever be abolished. And the point for our communities to note is that this is becoming a very important tax, because our communities are savers, and, you know, they create wealth and they accumulate wealth. So that was my comment.
The other guys, Hiten and Samir.
Okay, so I'll kick off. So there are three lots of countries, three types in terms of the IHT. There are the ones where they have the IHT regime and they've never abolished. There are ones where they had the IHT regime and they've abolished, for example, India back in the 80s. And there are countries like Kenya who do not have an IHT regime, and we fall into the first category, and UK is the third highest in terms of IHT rate. And I would go back to Sailesh's answer that I don't think so, and it's going to get abolished.
Yeah. Hiten, anything to add?
I think with what's happening currently with coronavirus, obviously the government is going to be under severe pressure to raise revenues. And they've been talking about reforming inheritance tax, because if you have, say, shares in a trading company, which you hold at the date of death, there's no inheritance tax, there's no capital gains tax. And they're talking about maybe giving you a choice. Either you pay the inheritance tax or you pay the capital gains tax, but you can't avoid both of them, which is highly likely now going forward. But again, we wait and see what happens.
Great. Sorry, everybody. Time has actually taken over from us, and we've had to close this down now. Again, a very, very big thank you to Samir and Sailesh for the presentation. Fantastic presentation, I must say. Hiten, thank you very much for being on the panel and helping us answer the questions. Shandip, thank you very much for helping ask the questions as well. That was a great help. So if I may close there now, and just to let you know again, we are recording this presentation. It will be on the YouTube channel. It will probably take a couple of days just to get it on there. So please bear with us. You will get an email. And when you get the email, can you please also make sure that the feedback is also returned? Now, if there is a poster on our helping the elderly, the vulnerable, and those in isolation and key workers. If anybody needs help, please use that number. Finally, if you have further questions that we may not have been able to answer and you would like them answered, please just call or SMS or WhatsApp our helpline. The number is on the presentation again. And our next webinar, which is again, it actually follows from the wills and the IHT. In fact, it's on probate. It's very important that people know about probate. So that's on Wednesday at 7:30 p.m. So please join us. And if you haven't registered, please register. And finally, if you have any suggestions for further talks or webinars, please contact us on CAT8 webinars@gmail.com. Next slide, please, Nirmal. And thank you again very much for attending. Thank you again to the speakers and the panelists and the moderator. Thank you. Be safe, stay at home, protect the NHS, and save lives. Goodbye.
Thank you.